market is pretty confusing at the moment. I think most of you would agree, and it hasn't seen the easiest 2 years. In my opinion, Brexit so far in the prime central London market has not been the major downward pressure in that marketplace. And that is because although we've had Brexit and no investor, and particularly foreign investors, like uncertainty, they don't like a referendum, they don't like 2 general elections, they don't like an unexpected result from the Brexit vote. Of course, we have had an extraordinary weakness of the pound. And so for a lot of prime property or maintaining investment interest in prime central London, the counterbalance between a weaker sterling plus the Brexit risk have kind of been balanced out to some extent. So I don't think we have seen as much of an impact on that market from Brexit as we might expect. Funnily enough, I think the Brexit situation impacts more the general domestic market, where I think there's real concern about the domestic economy, real concern about job security going forward, and where and what is going to happen. And as a result, we're seeing continuing falls in transactions in the country as a whole, despite all the tax measures that the government's brought in to try and incentivize first time and buyers trying to trade up. We've seen a fall in transactions, and indeed we're not seeing any price growth. And the reality is, and I've been in the market for a very long time, when you see these kind of domestic hiccups, the domestic market really suffers, and it takes an awfully long time to recover. If we take the credit crunch, it took 7 or 8 years really to get back to par. We've seen about 2% growth on average in the domestic market since the credit crunch, and no real growth. So although the press talk about bubbles and all of those kind of things, they're really not happening in the domestic market. In Greater London, we've seen a lot of growth since 2014, mainly catching up from the depression from the credit crunch. That slowed right down, and transactions are falling as well. So then we get to prime central London, and something really weird is happening in prime central London, which is that if you read the land registry results, which records every asset sale, you are seeing prices going up. And yet most people around this table would think that prices are going down, that either agents are having to price properties more cheaply in order to get the interest, or there are quite good discounts being available. And the reason for that, as far as we can tell, is a change in the kind of buyer. So we concentrate on the rental sector, i.e. people who are buying for investment, and as a company, we're a full asset management company. We acquire, we renovate, we interior design, we let, we manage. It's a complete one-stop service which is financially based. And what we're seeing is that the number of investors, i.e. specifically buying cheap buy-to-let properties, because the properties that rent best are 1 or 2 bedroom units, are decreasing because out-and-out investors are sitting on the sidelines, basically waiting to call for the bottom of the market. And what we're seeing is an increase in home buyers, and by that I mean probably 2nd, 3rd, 4th home buyers coming from abroad who can see discounts maybe of 15%. They're seeing 20% reduction in prices if they're US dollar denominated investors over the last 2 years, and very low interest rates. So what you're seeing is those people who actually want to buy a property because they want a second home, their kids are going to university or whatever, are coming into the market quite strongly, and the out-and-out investors saying, well, we're going to wait and call the bottom of the market. Of course, they'll miss the bottom of the market, because when the media say it's safe to go back into the water, investors come back and the market hardens immediately. It's pretty much a self-fulfilling prophecy. The investors, the buyers create the market, and that's basically media-led, and that will come back. But because we're seeing a higher proportion of discounted higher value properties being bought and a lower proportion of discounted cheap properties being bought, if you look at land registry, prices are going up. And we don't dare report that, much as we would like to, because it's an artifice in the statistics. So basically, overall, we're seeing transactions still falling, prices ironically increasing in prime central London, but that is an artifice, and still a very, very soft market. So at the moment, we're seeing really good opportunities for people to come into that market, but we do envisage the market hardening despite Brexit, because the other thing about investors is they get bored with uncertainty. They have to place their money somewhere. Central London property is an uncorrelated asset class. London, as Louise mentioned, centre of the rule of law, a relatively stable political and economic situation, a centre for culture, for education, for tourism, and of course finance. And we will be a financial centre in one way or another.